Imagine the journey of the coffee beans in your morning brew. They likely began on a distant farm, packed, shipped, and loaded onto a massive container ship. That ship crossed oceans, braving storms and crowded ports, just to deliver those beans to your local store. This global ballet of logistics is the lifeblood of our modern world, so seamless, we barely notice it. The container ship, a mid-20th century invention, revolutionized trade, making goods cheaper and more accessible everywhere. But the journey isn't always smooth. Delays from crowded canals, piracy, or political tensions can drive up costs. Every disruption, be it drought, tariffs, or conflict, eventually lands in your cup, raising prices and uncertainty. The routes these ships take are vital economic arteries, and control over them shapes the price and availability of nearly everything you buy. Now, China is proposing a new canal, an audacious project that could forever alter the map of global trade and power. Global shipping is the invisible engine behind almost everything you own. Over 80% of all traded goods travel by sea, connecting factories, farms, and consumers worldwide. These sea lanes don't just move consumer goods, they transport the raw materials that fuel industries and feed populations. When shipping runs smoothly, the global economy hums. When disrupted, prices spike and shortages hit fast. The system relies on a handful of chokepoints: the Suez Canal, Panama Canal, and Strait of Malacca. Control over these narrow passages means immense geopolitical and economic power. For you, stable shipping lanes mean affordable groceries and electronics. Disruptions mean higher prices and empty shelves. Recent crises, from pandemic supply shocks to attacks in the Red Sea, show just how fragile this system is. Every new canal, tariff, or conflict ripples through to your wallet. The security of these waterways is not just a global issue, it's personal. China is planning a move that could reshape global trade. The Canal, or Thai Canal. This proposed waterway would cut through southern Thailand, connecting the Gulf of Thailand to the Andaman Sea. Its main goal, bypass the congested and vulnerable Strait of Malacca, through which a third of global trade and most of China's energy imports flow. For Beijing, this Malacca dilemma is a strategic weakness. The Thai Canal, likely built and financed by Chinese state-owned giants, is China's bold answer. It would accommodate the world's largest ships, offering a faster, cheaper, and more secure route for Chinese commerce. More than infrastructure, it's a symbol of China's rise as a maritime power, giving Beijing influence over a new artery of global trade. This $50 billion gamble is about more than shipping. It's about securing China's future and projecting power worldwide. To grasp the Thai Canal's potential, look at the Suez and Panama Canals, historic shortcuts that transformed global trade. The Suez Canal slashed weeks off the Europe-Asia route. Its 2021 blockage cost the world billions per day. The Panama Canal, an engineering marvel, let ships avoid the treacherous trip around South America and cemented U.S. strategic dominance. The Thai Canal would be a sea-level shortcut, like Suez, but built for the world's biggest ships. It would cut 750 miles and several days off the journey between the South China Sea and Indian Ocean. More than saving time, it would reduce China's exposure to piracy and blockades in the Malacca Strait. Like Panama, it's a project designed to secure a nation's access to the seas and project power. The Thai Canal could become the 21st century's most strategic waterway. Today's shipping industry is in crisis. Attacks in the Red Sea have forced ships to detour around Africa, adding weeks and costs to voyages. Meanwhile, drought has crippled the Panama Canal, slashing capacity and creating massive bottlenecks. On top of that, U.S.-China trade tensions have triggered new tariffs and port fees, driving up costs for everyone. Shipping companies are scrambling, canceling sailings, facing volatile freight rates, and struggling with constant unpredictability. This perma-crisis exposes the fragility of global shipping and the urgent need for more resilient routes. For China, building a canal it can control is a strategic solution to these mounting risks. The world's supply chains are more vulnerable and more politicized than ever. For China, the Thai Canal is more than a shortcut, it's a strategic game-changer. It offers a solution to the Malacca dilemma, giving China a secure alternative route for vital energy imports. In a crisis, this canal could keep China's economy and military supplied, even if rivals block the Malacca Strait. Economically, it would give Chinese companies a competitive edge, lower costs, faster deliveries, and priority passage for state-owned shipping giants. The canal would anchor new ports, industrial zones, and logistics hubs, pulling Southeast Asia deeper into China's economic orbit. It would also boost China's Belt and Road Initiative, expanding its influence across the region. Critically, the canal would let China's navy move quickly between the South China Sea and Indian Ocean, challenging US and Indian dominance. China's commercial fleet is already built to military specs. This canal would be a strategic gateway for both trade and power projection. The Thai Canal isn't just about commerce, it's about reshaping the balance of power in Asia. For China, it's an insurance policy and a statement of ambition. The Thai Canal's promise comes with huge risks. Environmentally, carving a 75-mile channel through southern Thailand would devastate forests, wetlands, and marine life, threatening fisheries and tourism. The project could displace communities and disrupt delicate ecosystems, sparking fierce opposition. Politically, the canal would split Thailand in two, deepening regional divides and potentially fueling separatist tensions. Many Thais fear losing sovereignty to China, turning their land into a strategic asset for a foreign power. The canal could also destabilize Southeast Asia's economy, diverting trade from Singapore and Malaysia and creating new regional rivalries. Globally, it risks escalating US-China competition, making trade routes a new front in great power rivalry. Financially, the $50 billion price tag is daunting, especially as nearshoring and trade wars threaten to shrink global shipping demand. If the world fragments into regional blocks, the canal could become a costly white elephant. The Thai Canal could solve old problems while creating new ones. The Thai Canal would be a geopolitical earthquake, shifting the balance of power in the Indo-Pacific. For decades, the US Navy has secured global sea lanes. A Chinese-controlled canal would challenge that dominance. In Panama, the US recently moved to block Chinese influence, highlighting the stakes of strategic waterways. The Thai Canal would let China project naval power into the Indian Ocean, threatening US and Indian dominance and creating a new arena for competition. In a crisis, like over Taiwan, the canal could give China a secure supply line, undermining US strategies to cut off its energy. Experts call it a military solution disguised as an economic project. The canal could force nations to choose stick with US-policed routes, or use China's shortcut, splitting global shipping into rival spheres. This division could intensify trade wars and make supply chains even more fragile. The Thai Canal isn't just a waterway, it's a lever of global power. The world's shipping map and its alliances may never be the same. The Thai Canal's future hangs in the balance, caught between ambition, risk, and global rivalry. As of late 2025, it's still a proposal, but momentum is building in Beijing and parts of Thailand. If approved, construction could begin within years, watched closely by governments and corporations worldwide. Meanwhile, shipping's perma-crisis, from Red Sea attacks to Panama droughts and trade wars, shows no sign of ending. Some see the canal as a needed fix. Others warn it could deepen global divisions and environmental harm. For ordinary people, the stakes are real. The canal could lower costs and boost development, or fuel new conflicts and instability. Control of this waterway could give one nation unprecedented influence over the global economy. The Thai Canal story is a microcosm of our era. Globalization colliding with nationalism, and infrastructure shaping the future. Whether it's built or not, the idea alone has changed the conversation, exposing the vulnerabilities and rivalries of our interconnected world. As China weighs its bet, the world waits to see if the map of global trade is about to be redrawn.